Let's now connect with Adrian Lim, Senior Investment Manager at Aberdeen Asset Management, who joins us from Singapore. Adrian, good morning. What a delight to have you back on ET now. Adrian, at the current juncture, how exactly would you view Indian equities? 2012 was a strong year for Indian equities. Benchmark indices appreciated by about 20% plus. Do you think we could see a repeat of that this year as well?
Well, 2012 has been an excellent year despite the headwinds earlier this year. I think since the finance ministry was reshuffled and Chidambaram came in, we've seen a surge and recovery in interest and sentiment in the market itself. I doubt the chances of replicating that would be very strong unless we continue with the momentum of reform. The underlying companies remain strongly positioned for extracting good gains in the market, but the market as a whole will come through some headwinds and some challenges as well. So we think the chances are more muted in 2013.
Right. So Adrian, doesn't high valuations deter you at this point?
Yeah, actually the high valuations are a cause for concern and give pause to what you actually put your money in India. That's why we think picking stock is very important, and you do need to be very selective about what you're exposed to.
So Adrian, in terms of themes, what are you bullish on for 2013, and what to your mind could be the top story for this year?
It would be very similar to what we have been attracted to Indian market. Domestic consumption of products and services are the most attractive parts of the Indian market to us. We like companies that manage, invest, develop their brands on strong product quality or service quality, and we think that the domestic market would continue to drive growth over the longer term in spite of what macro headwinds might come.
Right. Adrian, you've been overweight Indian financials. Are you sticking to this call? Because you do preferred earlier at least private banks over state-owned.
We have large positions in Indian financials. As a sector, it is one of our larger positions. Whether it's overweight or underweight, that's not something that we pay attention to. There is volatility, and sometimes the benchmark has more financial stocks and sometimes it doesn't. We do like the private banks and financial institutions. We think that they are more keenly focused to the profit motive, and we think that they will extract stronger gains from the market in times like this.
Adrian, let's talk about specifics, since you insist that you only look at stocks, not sectors. HDFC and ICICI Bank, they continue to be your top picks. After the recent outperformance, are you still confident that you want to stick to those two stocks?
We have HDFC, we have HDFC Bank, and we have ICICI Bank. We're confident because they are very focused on servicing their customers and expanding their products and services range. Even if there is an extended slowdown, we think that these financial institutions have a very strong position within the market, and it might wobble a little bit, but over the medium term we think that these banks are very well positioned for growth.
Right. Adrian, are you confident that Reserve Bank of India would ease rates despite high inflation?
I don't have a strong call on where the interest rates would be going. It is a very complicated mix within the Indian market, and just like your viewers, we will be watching keenly the developments on interest rates.
Adrian, so what about the consumer sector? Your bet on Indian consumption so far has played very well in 2012. Would you still expect good returns from HUL and ITC, essentially the expensive part of the market, the consumer staple part?
We think that the share price of some of these stocks are quite fully priced at the moment, but we do take a long-term view. All these companies have got very strong brands and service their customer niche very keenly. There are quite a lot of barriers to entry. It's not easy for a local brand or for a new foreign entrant to come in and jeopardize some of their margins. So we think over the long term they would do well. Over a calendar period, it's difficult to tell. Valuations have done very well over the last year.
Right, Adrian. So in addition of Asian Paints, Nerolac, exposure to cement, is the extension of this consumption theme itself?
Yes, it is. Just like home ownership, just like private property ownership, just like the expansion of physical commercial space or residential space, paint would be a supplementary product that would feed into those drivers of the economy, and we think it's a trend that will be there for quite a while.
What are thoughts on IT sector? Infosys is all set to lower its FY13 guidance along with its upcoming Q3 numbers. You have a large exposure to Infosys. Does that bother you?
It's difficult to say and predict. Well, you might have information on guidance that's not available, but it's difficult to predict exactly what the guidance would be going forward. Infosys has had a series of downgrades, and it is a company still in transition. If you look over the last 10 years, it's done a very good job, but with all successful companies in competitive areas, the last 2 years, 3 years have been a challenge. We like TCS as well, and we have very chunky exposure to both Infosys and TCS, and we think that these two companies provide good balance to the portfolio.
It's quite interesting that your only exposure in the Indian auto sector is through Hero MotoCorp. Why is it that you like this one?
Well, it's easier to sell two-wheelers than four-wheelers. A greater portion of the population can afford a motorbike than compared to the portion of population that can afford a car, even if it's a small car. And Hero has been selling bicycles and then now motorbikes for 2-3 generations now. We like what they do. We're close to the company, and we've seen their progression from partnership with Honda to coming out on their own, rebranding, and then now delivering purely Hero branded products to the customers. So we think that the penetration levels remain something that can drive long-term growth, and we think that Hero is well positioned to take advantage of that trend.
Adrian, a lot of market participants are also bullish on Indian pharmaceuticals. Do you find merit in any of the Indian pharma stocks?
Yeah, there are parts in Indian pharmaceuticals that have done very well. It is a very specialized area where you do need to know quite a lot about the specific products in the pipeline, the specific drugs in the pipeline, and it's something that we do like, but we don't have a lot of exposure in, and it's something I'll be cautious about. But some of the natural strengths are very clear. They've got strong bench chemists in India at competitive global rates of wages, and you have a large market that can support selected drug applications in the country that can give these drug companies economies of scale.
Are you still shying away from the Indian energy sector then?
Yeah, unfortunately, we can get better and more stable growth opportunities outside the energy sector. It is a very difficult and often politicized segment where a lot of energy companies are expected to subsidize inflationary pressures from the end consumer, and that makes it very unpredictable. Given that many of these adjustments are guidelines, rule of thumb, and done in retrospect, it's very difficult to predict exactly where earnings numbers would come in at, just as it's so difficult to predict what the price of oil would be in 12 months, and that's why we've shied away. But there are some decent companies here.
And Adrian, finally, do you see possibility of a populist budget, or you expect that this time around the finance minister will bite the bullet and he will come out with a tight budget?
Well, I think I take a very pragmatic view. Every democratic government around the world would lean towards a populist budget in a year where there are crucial elections, and I don't think India is an exception. It doesn't necessarily mean it's going to cost a lot. It doesn't necessarily mean that it would derail reform, and I think it could work to drive consumption or shorten recovery in the Indian markets. So I'm quite relaxed about it. If it comes, it comes. If it doesn't, that's fine too. I don't expect silliness that would derail reforms.
And what risks would you watch out for when it comes to India right now?
The macroeconomic risks are persistently high levels of inflation, bottlenecks in infrastructure, physical infrastructure, and regulation that is stifling. I think the government has taken some tremendous steps to rectify some of these issues over the last 6 months. But the key thing is execution, and it also depends on the politics of the elections and in whether enough the government would get adequate mandate to confidently execute on some of these reforms. It's very nice to talk in general terms, but at the end of the day, we need to see how the reforms are rolled out.
It's so nice to have you on the show, and thank you for joining us.